Hey everyone, and thanks for jumping back into the Cryptoverse. This is your Thursday AMA premium video. So let me just go ahead and grab the link here. We will post this over in the Telegram chat room and we will get started. So feel free to ask any questions that you might have. We'll probably go 30 to 45 minutes and get through as many of those as we can. Just to sort of fill in while people trickle in and ask questions. You know, Bitcoin right now is just below that $21,000 level. The S&P has sold off though, so I mean it's right around 3,900. So a somewhat substantial sell-off here by the S&P 500. And of course, as we also were sort of noting in the Telegram chat room recently, it does seem that all these local tops have in fact occurred on a Tuesday. Apparently it's called Turnaround Tuesday. It's like a known thing in equity markets, which I was actually unaware of. But Tuesdays can often mark strong days after a potential weak Monday. But they can also mark, turnaround to the downside as well. And you can actually see that every local high on the S&P 500 during this bear market has in fact occurred on a Tuesday. Funny enough. And so let me just go ahead and see what questions we have. Hi, Ben. You spoke about capping Bitcoin purchase at the 0.4 risk band this cycle when it's time to DCA ETH. Given it hasn't really spent much time in the lower USD risk levels of the bear market so far, are you considering a cap at 0.4? Or would you go higher despite it being a riskier buy? I would be capping it at very, very likely 0.4. It is possible. I would have to. So if you go take a look, let's go take a look, right? So if we go over to the dashboard and we go over to the risk levels, here's the one for Ethereum. So the ETH risk right now is if it loads, but I believe it's actually quite a bit higher than where Bitcoin is. So Bitcoin's at 0.333 risk if you just look at this risk metric. And then if you look at this one, ETH is at 0.467. So I would say like the only way I would buy it above 0.4 risk is if somehow it just spends the entire year above 0.4 risk. I think at some point this year it'll be below 0.4 risk, and therefore I reserve the right to try to buy it at that time. But going forward, I imagine I will just be sticking to less than 0.4 is what I would say, and probably less than 0.3 for the altcoin market. Okay, so maybe 0.4 for the blue chips and probably like 0.3 for the altcoin market. Can I dive into the differences between real personal income and transfer receipts? So if we go over to the Macroverse, we've added some stuff recently. So we have transfer receipts. This is real personal income, excluding transfer receipts. So if you look at this metric, actually, one of the things, and by the way, some of the macro charts we can be biased, right? Of course, we've talked about the recession likelihood. There are some charts that are not necessarily screaming recession, right? There are a few. Some of them are actually, going in the opposite direction, in fact, right? If you were to take a look at say, a moving average, let's maybe a shorter time frame moving average, like a 7-month moving average, this is actually going up, right? So normally the recession occurs down here, but it's going up right now. I would point you to the fact that over here it kind of went down back up and then it went down much further. But right now it's actually going up. If you look at it on a smaller time scale though, it went up quite a lot and then it's been coming back down. In October though, or in November, it popped back up. This is one of those that is not yet screaming that it's time for a recession, right? Some of them are, some of them are not. And so, I have thought about creating something of like a risk metric on the macro stuff just to give us a better idea of what's going on. What was the other one you asked about? Real personal income and transfer receipts. So this is real personal income excluding transfer receipts. And then this, if I go to transfer, maybe we don't have it on the website. I can't remember if we have it on the website or not. We're adding a lot right now. No, we don't have it on here yet. So we've been adding a lot of indicator. I mean, this is just real personal income, including transfer payments. So once we get the other one on there, then I suppose we can take a closer look at what the differences are. But unless I'm missing something or if I'm forgetting, we don't actually have this one on here just yet. The DXY possibly looks like it's playing out as you would have expected with bouncing off support. It's actually not. I mean, like, you know, as I expected, technically, I said I thought it was going to bounce at the 102 to 103 range. That's what I said, right? 102 to 103. And it's at 102.1, you know, I mean, and it's all the way down here. It actually went all the way down to 101.5, 101.5. So I don't know if we can say that's how I expected or not. I would have actually expected a bounce already. The only thing that I would like to draw your attention to, and just to keep in the back of your head, I would not expect it to play out in the same way. But if you go look at what happened in the 1980s, again, during a period of high inflation, when inflation was really starting to come back down, what you'll notice is we had a very similar move. And what's funny is if you take the peak here to the bottom on DXY, let me zoom in and get it accurate as I can, right? So this was the peak, and then this one was here at the bottom. 16 weeks before the dollar bottomed after its major run up, right? 16 weeks. And remember, it ran starting from around 84, okay? So from 84 to 114, almost 115, pull back to that 103 area over 16 weeks, right? Remember that. 115, almost 115, to 103 over 16 weeks, starting from a run up around 83. All right, now let's fast forward in time. Okay. This one sort of ran up starting at 89, a bit higher. Where did it run to? Oh, just below 115. How long has it taken to get to where it is right now? If you care to take a guess. 16 weeks, right? We're at 16 weeks right now. So is this where it's going to bounce? I don't know. I mean, my expectation was it was going to bounce at the 102 to 103 level. It's already gone below 102. But from a time-based component, I mean, it's been about 4 months, right, since it all started, since this downtrend started. I do think it's going to get a bounce regardless of whether it puts in a new high. So whether the dollar puts in a new high or not, I think it's going to get a substantial bounce here at some point in 2023. That'll take it back up, you know, to at least the 108, 110 level. I think there's a good chance it could make a new high, honestly. But the further it goes down here, I'm going to have to readjust that strategy. The good news, right? The good news is that despite not, you know, or at least I would say despite thinking that it was going to bounce, it hasn't really changed the direction, right, of risk assets. I mean, in general, risk assets have continued to trend down. The S&P recently got rejected once again. And so, yeah, I mean, like, it hasn't really gone exactly how I thought, but fortunately, it hasn't really affected my portfolio either. So we'll see if it bounces here. It's been about 16 weeks, which is actually what it took last time. Do I have some kind of other alter ego Twitter account? No. I think I do have some. I think I had another account at one point, but it was just like I have, like, you know, one follower or something, and I just like I don't use it. I just use you know, the one I have now, right? But no, I don't use any other Twitter accounts by the one other than the one I have. And the only other one I had, it was just like my name. It was just like my name rather than like actually the tag, my name tag was already taken, but no, I don't actually use it though. I just use into Cryptoverse. It would be into the Cryptoverse, but it's too many characters. When would you consider your Ethereum coming home thesis invalidated? I don't know. I mean, I would say if it doesn't happen. Here's the thing. Here's the thing about it coming home, is that home's also coming to us, right? So I mean, we talked about that as well. I don't think the next bull market is going to take place until after ETH comes home, whether we go to it or it comes to us, right? So maybe the better question is when would you consider, you know, the $400 to $600 range invalidated? I mean, look, if we get a recession and it's still not going down, then I mean, I guess I'm wrong about it, right? But here's the thing. I mean, I can't consider it invalidated right now. We're literally in the phase, potentially, of the dominance finally heading higher. I mean, it's slow. You know, it's taking forever, but it's going higher. And so I'm not going to say that Ethereum can't dump, when you're seeing this play out right now, right? The dominance is moving higher. Imagine what happens if Bitcoin goes down. We already got a glimpse of it the other day. The altcoin market got wrecked. So yeah, I don't know. I mean, it's hard to put an exact date. I mean, I'm sure 6 months ago I would have said in 6 months if it hasn't happened, I would probably consider it invalidated. But admittedly, these things have taken a lot longer to play out than I thought. So, I mean, I think if the macro headwinds weren't there, then you could have already considered it invalidated, right? Like if we're being honest, right? Like if from a cyclical point of view, crypto has kind of run its course, but the macro headwinds keep me somewhat uneasy about risk assets in general. Now that Bitcoin has re-entered the bottom regression band, do you think a refit is needed? Yeah, probably. I need to refit it soon. I haven't done it yet, just because I would prefer some level more confidence in the bottom actually being in before it's refit. I thought that by the end of 2022 we would see all of the indicators provide that signal, and most of them have. There's still a few of them that have not. I would like to see those ultimately trigger before I do it. Is kind of where I am. Any chance we could see risk metrics for fixed income? Maybe. We're well away from that right now, though. I mean, right now we're focusing on macro stuff. As you guys know, we're adding a ton of macro stuff to the website, and then after that, we're going to be focusing on equity stuff, like adding profits to earnings and that kind of stuff. And we just want to make a very well-rounded website where you can get access to what you need or what you might want. Ben, thoughts on Arweave, ETH, and Bitcoin as potential oscillator? I don't know. Is it? I've never really even heard of this being an oscillator before. I don't know if I don't really think there's enough data to know if it's an oscillator. I mean, if it is, it still has a long way down. I mean, you're still talking about 80% down if it's an oscillator. If you want to say that ignore this area over here, you could argue that we did with Ethereum, then it means it still needs to drop another 42, 43%. I would say it looks like a macro downtrend to me, right? It looks like a macro downtrend to me. But it doesn't mean it can't be an oscillator eventually. I don't know. Please give a concrete time frame for when to DCA Bitcoin. Look, I've said before that, I mean, if you go back and watch any of these premium videos of the last how many months, I'll keep saying it. For most people, the best strategy is to just DCA, right? Based on the risk levels. It's not any more complicated than that. Because the problem is if you don't, you just end up FOMOing in at the new local top. Okay, I've told you what I'm doing, but again, probably the best strategy for a lot of people is just to DCA. Do I think Bitcoin's going to hit 200, 300K next cycle? I don't. No, I'll be honest with you guys. I don't. We've already started seeing these predictions, coming out. People calling for 300K again. I don't think it's going to 300K next cycle. I just don't. Right. I think let's try to get to 100K. Right. I mean, and the only way we're going to get there is if the macro stuff clears itself out before 2025. So I don't think we're going to go to 300K. No, I don't think we're going to go to 200K. We might get to six figures, but I think the only way we can really get a better idea of that is how far down is the bottom? Is the bottom in, or do we have to go to 13K? Do we have to go to 10K? Right? It depends on how far down the bottom is for us to really know. And it's just simply, and we will never really know, right? But in order for us to have a better prediction, I think you have to know where the bottom is. Of course, everyone's calling for the bottom already, and maybe they'll be right. But I also think as an investor, you have to be flexible on things, right? You can't just unilaterally call the bottom. You can't just unilaterally call the top. Think about all the pressure that people had to call the bottom over here, and everyone was calling the bottom, right? A lot of people were calling the bottom, and then it ended up not being the bottom. I mean, so first of all, I think we have to give 2023 a bit more time to play out, especially with the macro headwinds, and then we'll see where we are, and then we can talk from there. Okay, what is the most likely outcome? Do I see myself deploying a large percentage of your cash stack when egg USD bottoms? Yeah, funny. I've been dynamic DCAing Bitcoin using USD price risk. Is this the recommended method, or are we shifted to using total summary risk? So I've shifted to the total summary risk. I mean, again, people are free to do what they want to do, but I've shifted, and I'll explain the reason why. If you go to the indicator dashboard, the total risk, in my opinion, does a little bit better of a job of nailing the second peak at, it actually went up to 0.75, right? Whereas this risk metric, so this one over here did not go as high during that second peak. It just went to like 0.55. Note that the total risk includes the other risk metric in it, okay? So I am using this one now. That doesn't mean that you have to, but this is the one that I am using, right? So right now, I'm using this one. We didn't spend months and months and months and months developing this risk metric to account for price metrics on-chain and social just to not use it, right? So for me personally, I'm using this one. That doesn't mean that you should stop using the other one if you prefer it, but this is the one that I'm using. So that answers the next question too, if I'm going to retire that one. If someone were to start DCAing Bitcoin today, when would you aim to have your cash stack fully deployed by? Well, I would say it's always good to have some cash, right? Like even in a bull market, you're going to want like 5 or 10% cash at the very least, just to take advantage of dips and stuff and new projects that may launch. So I think you're always going to want to have some cash, right? Like it's not a good idea to just not have any, because you never know what could happen. I mean, like, you could be in a bull market and then some major black swan, an actual black swan, right? Like not like the black swans that have occurred that people call black swans in 2022, but an actual black swan could occur at some point. And you always want cash for that. So I'd say you never really want to be fully deployed on your cash stack. But I would say, to have most of it deployed, if you started today, I would say over the next like 12 to 18 months probably is where you'd want to be. But I would say if you're going to do that, it might be more worthwhile to front load some of that so that the amount you're putting in, say 18 months from now, in say mid 2024 isn't as much as you might be putting in, say in the summer of 2023. So it probably would be better to put more in the summer of 23 than the summer of 24. But that doesn't mean you shouldn't put any in 24 because, there's going to be altcoins that pop up next year, I'm sure of it, or I'm pretty sure, right? Because it always happens, that you're going to want to get, you're going to want to get a position in probably, and you just can't get it now. So if you don't have any cash for that time, then how are you going to take advantage of it? So that's why I think like over a longer period of time, it would be better to slowly get into the market, and you don't want to fully deploy just so you actually have some cash later on. Is it advisable to take some Bitcoin off the table if we make it to 23 to 24K? I'll be honest, while you could always make the case that that's a smart thing to do, from a risk management perspective, like I would be remiss to suggest selling Bitcoin, at like a 0.3 risk level or something. So I would say my official opinion is no, but it doesn't mean it wouldn't work out in your favor. Okay. Especially just considering, the kind of where we are in the cycle and the choppiness, the choppy behavior of, a year after the bear market starts can often lead, these temporary price surges to ultimately resolve to the downside. So I'm not saying it wouldn't work, but I'm not going to advise that someone go do that. What percentage chance are you giving to the outcome of Ethereum still heading down to 400? So it's not 400, it's a range. I think it's going to go from, to the 400 to 600 range. I don't know if it'll make it all the way to 400. It could go below 400 too. Like if I were to have a guess, if I had to guess, I'd say it's probably 70-75% chance likelihood in my mind of happening. I understand a lot of people disagree with that assessment, and that's fine. And I would also say that the further we get into 2023, the longer it doesn't happen, the probability goes down. But right now, I would still say it's probably like a 75% chance of occurring. If it's the end of the year and it still hasn't happened, if it's say the summer and it still hasn't happened, then I might say it's a 60% chance of occurring. If it hasn't happened by the end of the year, then I might say 50% chance. But I still think the odds are in the favor of it ultimately resolving to the downside, at least right now. Okay, and it doesn't mean it can't go up first. I mean, it could always rally back up to $1,700, $1,800, but it doesn't mean it's going to necessarily escape that fate. That's my current opinion on it. How accurate do you think that altcoin risk metric will be when it's released? It's already released. Okay, so if you go over to charts, or just go to the dashboard, right, and you click on over here, we have the altcoin market cap risk metric. It's already here. Includes diminishing returns, right? So if you want to use the altcoin risk metric, it's right here. This is the entire altcoin market. I think we need a little bit more dark blue down here, like we've gotten before. So I think we need a little bit more dark blue before we ultimately have a realistic chance of going much further to the upside. It's already here. Samson says, with the DXY cooling off, low VIX, and inflation seemingly peaked and coming back down, Fed close to stopping rate hikes and a pivot any day now, what will turn you bullish? Well, it's funny how you phrase it, because it's almost like you're phrasing it as if all those things are bullish, and I'm not bullish even though those things are bullish. A low VIX in bear markets usually means we're about to have another move to the downside, right? So like the S&P 500, as we showed, right, with a low VIX, the VIX is bottomed at like 18 and 19 every single time the S&P tops. So about having a low VIX, you're talking about, you know, like it's more likely, in my opinion, to see it go back to the VIX to go up and the S&P to resolve to the downside. So that's not a bullish thing, in my opinion. If the VIX were higher, then you could actually, I feel like if it were a lot higher, you could really start to get bullish. It wouldn't feel like it's bullish at the time, but remember, you have to get bullish when no one else wants to be. The other thing is that inflation seemingly peaked and coming back down. Yeah, like that's a good thing, right? That's a good thing. The other way that you could look at that, though, too, is that it's coming back down maybe because people just are not spending as much. And that would be maybe indicative of a sign of a recession. So, again, I mean, one of the things that you have to remember is that, so this is where I really struggle with the idea of you know, being felt like I need to turn bullish for whatever reason. When you look at the yield curve, okay, when you look at the yield curve, market didn't bottom when it looked like this, right? This is not when the market bottoms usually. The S&P doesn't usually bottom when the yield curve looks like this, okay? It doesn't mean it can't rally for a while. I'm not saying that. I mean, it doesn't mean that the S&P can't eventually take out the downtrend line and go higher. But until this resolves, like it did back over here, or like it did in the .com, right? Until it resolves, what usefulness is there in trying to call the bottom? Because every prior bottom does not occur when it looks like this, right? It occurs after it resolves. You see? So if the S&P typically bottoms after it resolves, how can I look at this and say the bottom's in, right? I mean, again, I'm not saying that it can't be, but it just would be completely ignoring what has happened basically every single time. And I'm pretty sure that this has given like I think this has been like a fairly accurate signal for when the S&P bottoms or when it's not bottomed, right? It doesn't tell you exactly when it bottoms, but it has told us when it hasn't, right? And what I mean by that is when it looks like this, it still means the S&P hasn't bottomed, is what I mean. So if you're asking what's going to turn me bullish, I would say I'd like to see the resolution of the yield curve to where it's no longer inverted, okay? And I'd like to, you know, I'd like to see either we're in a recession and we know that the market bottoms during that time, or if somehow we avoid it. So if we avoid a recession and this gets resolved, then I would turn bullish. Or if we, either way, right? I mean, whether we get a recession or not is irrelevant. When the yield curve resolves, I'll be more confident about a bottom. Well, what will your percentages be when you're fully in altcoins? I don't know. Maybe I'll have like 10%, 15% alts or something like that. Are you still just stacking cash? My cash position hasn't really changed, like 62, 63%. Um, Sorry, let me look at the YouTube comments more. Maybe data from previous cycles can give us insights into an edge next cycle. Yeah, would it be possible to develop altcoin indicators to see when narratives are trending or how long a particular trend lasts? Altcoin pumps are usually cyclical, but difficult to predict. Yeah, it's a good idea. I mean, maybe one way to look at it is like how different sectors of the cryptoverse are moving as a whole. So I'll keep that in mind. Thoughts on HBAR, perhaps HBAR ETH is an oscillator. Let me go take a look. Maybe. It's possible. Okay, it's possible that it's an oscillator. But it could also be an oscillator if ETH kicks the bucket in the short term and maybe the altcoin market sees a temporary surge against Ethereum. But yeah, it is possible that it's an oscillator. Kind of see it sort of kissed where it was back over here in January 2021. Could I please take a look at VeChain ETH? Yes, this is something we followed back in the bull market. This is what it looks like. Yeah, it's still down here. I mean, my guess is it's going to stay in this range for a while. If it goes up, it might actually be because ETH is going down somewhat quickly. If if there's like a panic phase or something. But this is sort of the green box that we had drawn. You can see it's just been slowly trending down for a while. I'm not into VeChain right now, so I don't really have any skin in the game. But my guess is it's not gonna. It's not. I don't think VeChain USD is gonna go anywhere for a while. VeChain ETH is probably going to stay somewhere down here for another 6 to 12 months, if I had to guess. Any plans to add a portfolio tracker to the website? Nah, not right now. I'm not saying it'll never happen, but it's not my priority right now. Someone asked me if I take a look at the monthly RSI as a bottoming indicator. You have to be careful with the RSI because this is actually a question we got quite frequently back in June. Was that the idea was, well, the monthly RSI is all the way down here. Doesn't that mean it's the bottom because it's lower than it ever has been? And when like we ended up going lower once again. So I wouldn't use the RSI as a way to call the bottom because you already have the proof that it doesn't necessarily mean anything if it can go this low and then just come down even lower once again. The thing that I'd be looking at is where does this monthly RSI end up closing? Do we end up just staying below the prior support and do we hold that as resistance, which is a possibility? I'd be looking at something like that rather than calling the bottom using the RSI. Thoughts on the Metaverse cryptos? I am bullish on the Metaverse long term, but I don't know which ones are going to survive. The problem is a lot of these are not that interesting. And I've explored the Metaverse as it stands, and I think we're still a long ways off from something that people are actually going to use. So I would say I would be more bullish on maybe the next generation of Metaverse projects, not so much the ones from the last cycle. Do I have a feature roadmap? Yeah, we actually do. I don't think I've published it to you guys, but we do have a roadmap. Thoughts about China putting pressure on the inflation during this year versus last year? Yeah, it is possible. So I think that's the risk, right? Like the risk is potentially skewed to the upside on inflation if it potentially China reopening, and I imagine that would cause central banks to get more hawkish than they already are, but. Yeah, it is a risk, and I think it's going to sort of weigh against the idea of inflation coming back down simply because the Fed is helping reduce demand versus all this new demand that might be coming out of China, and trying to figure out, which one is gonna make more of an impact. Um, yeah, so those are my thoughts about it. I do think the Fed is going to be hawkish, more hawkish than most people think. I think a lot of people really don't believe them, that they're going to keep interest rates elevated, but I do think they will, at least for a while. In the next cycle, what do you think will be more bullish, L1s or L2s? I mean, I can tell you I'll have much larger allocations in L1s, but the smaller market cap projects are, sorry, my dog's barking. The smaller market cap projects can often run more, right, than the larger ones, but the larger ones are generally safer. So like, if you have like Ethereum is going to be much safer, I would think, than a lot of the layer twos that might be running on top of it. From a risk management point of view, I'd probably want to have a larger allocation in Ethereum than some of the L2s that are on it, or with it. But as far as like, so the definition of being bullish, I mean, you could see outsized gains on some of the smaller projects. Does it make sense to include Google searches about Bitcoin, Ethereum into the social risk? Maybe. See, the problem. So here's the problem, right, with the social risk. I like the social risk a lot, but there's one problem with it, and that's like, as we find more and more ways to make it better, it's going to then alter what we've been following, And I'd rather not do that. Like, I'd rather just follow what we have for a while, and then after it seems like the social risk as we have it has bottomed, then maybe we can add more stuff. But I feel like it would be doing somewhat of a disservice at this point to add new things to the social risk that then might completely change it. And it's like, well, we've been just watching it forever, and now you're all of a sudden telling me it's another risk band higher or lower than it was. That's what I want to avoid. So I think right now it makes sense to just use what we have. Maybe like halfway through this year, we could add more stuff to it just to make it, maybe try to make it a little bit more accurate for the next cycle. But right now, I'd like to just keep it how it is. No one really talks about the Fed balance sheet reduction and its impact on liquidity. I've talked about it before. I mean, we've talked about how the Fed's draining liquidity out of the system, and we've given the pool analogy, right? What do you think happens, right? I mean, they're sucking liquidity back out. It's not a good thing, right? I mean, you're fighting the Fed to assume the bottom is in, especially in the equity market. I mean, the equity market is not usually great is not usually doing that well when the Fed's doing stuff like this. Furthermore, for the person who asked me earlier what would make me bullish if some of the things that haven't yet with the Fed pivot, look, the Fed pivot is usually not a bullish thing. That's the issue, right? Like, that's the primary issue, is that by the time the Fed actually pivots, they're pivoting because they've broken something, and so it's not a good thing. So a Fed pivot is often a bearish thing, not a bullish thing. And if it's a bearish thing, then how do we get bullish before they even pivot? The counterpoint to that idea is, well, if they don't pivot until 2024, does that mean there's going to be a phase sometime this year where everything rallies for a while just on the hopes that we avoid a recession? That's a possibility, right? But it's hard for me to be bullish about a Fed pivot when essentially almost every single pivot in the past has actually meant further downside for equity markets. Yeah, I'll talk about someone asked, will you talk about new projects? Yeah, I'll talk about the ones I'll be investing in. I will talk about them, but the thing is like, there just haven't been any, right? Like, I haven't been getting into the market, at least not in the altcoin market. Okay, I've occasionally picked up some Bitcoin, as you guys are aware, but I haven't really been getting into the altcoin market at all. I haven't bought any altcoins in over a year now, right? So I'm not just gonna like make up, I'm not just gonna say, oh, well, here's an altcoin, right? I don't believe it, right? If I don't believe it, I'm not gonna talk about it. And I can't believe it that the altcoin market makes sense when the dominance is still this low. It's going in the right direction, right? Which is probably the direction that most people don't want it to go, because a lot of people want their altcoins to moon. But look, once it comes back up, then I can get bullish on the altcoin market. That's what's keeping me bearish on the altcoin market. You got to see this go higher, right? Once this is much higher, and I think honestly, I think the altcoin reckoning is in full swing right now. People just don't a lot of people don't realize it, but I think it's actually happening as we speak, right? I think we are in the altcoin reckoning. We're at the beginning stages of it. Well, it's been going on for a year, but the altcoin reckoning, more importantly, is on its Bitcoin pair, not the USD pair. And if this can finally continue to the upside, right? Once this is back up here, I can start to think about, getting bullish on the altcoin market. How can I be bullish on the altcoin market when it looks like this? We've talked about this for what, like a year now? 2 years? How long have we talked about this? Right? It's been a long time. I'm not going to get bullish on the altcoin market when it's finally at the beginning stages of this. No, let it play out, right? Let this play out for the next like 3 or 4 months, and then we'll see where the altcoin market stands, okay? You go look at total 2, it's not looking bullish. I mean, again, this is one of those things where like, yeah, technically anything can happen. Technically, we could break it out to the upside just like Bitcoin did. But also, technically speaking, this is not a bullish pattern, right? This is just a descending triangle with a series of lower highs. And if history is any indication, and if we come back down here, maybe you see some type of rally in March and April after the Fed potentially stops raising interest rates, but that could just be another lower high as well. And then you could see some mass resolution down to the downside in May and June, which, by the way, if it did that, if you saw this resolve to the downside in like May or something, that would actually correspond to when Ethereum resolved to the downside last year in like May and June. I think, right, if the bottom is not in, which you guys know my feelings, right? This summer is a big contender for it, right? This summer is a very solid contender for the bottom being in, assuming it's not in, right? Big assumption, I know, right? We're not perfect, but assuming it's not in, this summer I would think is a big contender. Furthermore, if the bottom is in, we're likely going to have to retest it at some point at the very least, okay? So that's my opinion. If the bottom's not in, I think this summer, maybe late this summer, could be, well, I think the crypto market will bottom before equities, frankly. But sometime this summer, I think is actually a strong likelihood that we'll see the bottom come in on a lot of the market. And think about it from a time-based perspective. That gives us enough time for the altcoin reckoning to finalize, especially on Bitcoin pairs, right? Give it 3 or 4 months. And then if Bitcoin wants to go down one more time, then that could be it. Right now, I know a lot of you guys think the bottom's already in, and I will say you could be right. Like I'm not as opinionated on it now as I was back in the summer. Like over here, I was very adamant that this was not the bottom, right? I did not think that June was the bottom. And I will tell you, this could be it, but I would say it's a higher likelihood that it's not. Okay. I think back over here, I said like, what did I say? Like 70-30. So I think I said like 70% it's not the bottom, 30% it is, but I was clear I did not think it was. Maybe this is like 60-40, right? It's like 60% chance it's not the bottom, 40% chance that it is. Okay, so I would say 70-30 over here, 60-40 over here. Okay? This is kind of how I feel. So I'd say still slightly leaning in the favor in my view of it not being the bottom. But I understand like the 4-year cycle theory and the bottom occurring, and I understand all that, right? So I'm not trying to be dismissive of it. Like it is a very popular theory and it's held water for a while. So to completely dismiss it would probably be somewhat ignorant. So I'm not going to say that it can't be the bottom. It could be, right? There's merit to the idea that it could be, especially from like a cyclical point of view. I struggle with, how is Bitcoin going to hold up if we're going into a recession? And if the S&P is in a longer bear market, can Bitcoin really hold on? So I'm leaning towards, you guys know where I lean, but I just want to be clear about that. By the way, if this is not the bottom, it could take a long time to play out, right? Like, I mean, it could do something like this, right? Where it you know, it runs and then finally sometime over here in the summer, it capitulates. Okay, so if it's not the bottom, still could take a while for that to actually be proven true. Is price risk or total risk more relevant for a DCA strategy? I think total risk is better, simply because it accounts for more things. And it doesn't put so much weight into a single indicator. But if you've been using the other risk metric and you don't want to switch, I think that's fine too. Okay, I've made the switch, and honestly, I'll probably use mostly the total risk indicator, but maybe occasionally I'll look closer at the risk metric that I have. I mean, you know, if the one that I used from last cycle goes to the 0.9 to 1 risk band again, and if the other one's only at 0.7 risk, then I might just say, you know what? I'm going to take more off the table because the one that has been proven before and that proved itself, it's calling the top again, right? And, you know, I know a lot of people say, well, it didn't really call the top because it didn't get the November top, but it nailed the you know, the March and April top, right? It nailed it. It went to the 0.9 to 1 wristband. If we find ourselves in the 0.9 to 1 wristband again on that metric, I'll probably pay attention, right? I'll be like, oh yeah, like it's probably close to the top. So that's kind of where I stand on it. What is my current cash percentage? So right now I'm at like 63% cash, and Bitcoin makes up like 97% of my crypto portfolio, something like that. Thoughts on the altcoin USD bottom, and we'll go sideways as Bitcoin slowly increases. That's fine too, right? As long as the dominance goes up, I think it's fine. That's kind of where I stand right now. Just the dominance needs to go higher. I think that Bitcoin's going to struggle to go too much higher in a sustained way between now and when equity markets finally resolve whether we're going into a recession or not. But I don't really care what way Bitcoin USD goes in the short term. I just want to see the dominance go higher, because once it goes higher, I can finally get into the altcoin market and you guys can get off my back about it. All right, guys, I think we're going to wrap it up. 41 minutes. So I think we'll wrap it up there.